Good day, learners. Today's lesson would focus on the cash flow statement. Note that this is one of the three financial statements that will appear on the annual report of a public company. The first one being the income statement, then followed by the balance sheet and the cash flow statement. Now, before we look at the composition of the cash flow statement, let's first get an idea of the purpose. Why do we prepare the cash flow statement? We have a definition or an explanation. It provides information about the cash generated by the business and where and how this cash is used. So looking at keywords in this first definition that we have here, we have information about the cash. Cash being money that comes into the business and the way in which this money is spent by the business. So when you see the word generated would mean where does the money come from? It would look at the sources, the source of that cash. Where did we get the cash? And once we got the cash, the next part of the statement will tell us exactly how this money was used by the business, where did we use it, and how did we use that money. That would be the application of that cash. So the two important words that you get here: cash generated from various different sources, generated, where did it come from, and cash utilized, how did we use it, or where did we use it. So that's what we would be looking at when we completing this cash flow statement. Now, the cash flow statement is made up of three sections, three broad sections. You have the operating activities, the investing activities, and financing activities. Before looking at the actual format, let's get an idea of what makes up these three sections of the cash flow statement. What type of information is contained in each of these sections. And sometimes in an exam, they do not ask you to do the entire cash flow statement. They might ask you to just complete a specific section of that cash flow statement. So let's give it a small understanding before we move on to look at the actual information. So operating activities, this would focus on the day-to-day running activities of the business. What do we do on an ongoing routine basis in the business? So this would focus on the core function of the business. We know the business has been set up to make a profit. That's the main intention of opening any business. We have a profit motive, and in trying to achieve this objective, there's various activities that we will do during the financial year, month by month, routine activities, and that would constitute the operating activities of the business. Okay, now the second section will focus on the investing activities. Investing activities will tell us where did we spend the money on capital goods, capital expansion. Just do not get confused with the term capital here. Capital expansion in this context is referring to the company purchasing assets that are required to run this business. Now, in grade 10, we did look at starting a business, and we said that in order to effectively start the business, we need to first acquire assets that will be used to run this business. A business would not be able to function without the basic fixed assets, such as the land and buildings. Where do we run the building? Where do we run this business from? The equipment that we might need to use, and any motor vehicles that we need to purchase, depending on the type of business that we are running. And remember, the assets that you purchase are all purchased with the intention of ensuring that we can achieve this profit motive that we have in the business. Okay, the third section would focus on the financing activities. Financing activities would tell us where did we get the money from in order to buy the assets which are used in our operations, daily operations. So although we are moving in this direction from operating activities into investing activities, into financing activities, I'm sure you have gathered by now that the actual start is at this point here, the financing activities. You first need the money. Where do you get the money from? And then once you've got the money, you invest that money to purchase your fixed assets, and then you use that fixed assets in your daily operations of your business. So you can do each section of this cash flow statement independently. And it depends where your strengths are. You can look at the information provided, and you can start anywhere in completing this statement. So just to give you a little more information on the financing activities, capital employed, we came across this term before. It's the total amount of money that is used to run this business. It will be made up of your own capital. In a company, that would be your ordinary share capital, and any money that you borrow, and that would be your long-term loans that you have acquired from banks and financial institutions to assist you to run this business. So capital employed is your owner's equity, your own capital, plus your loans. So in a nutshell, your cash flow statement will comprise of these three sections. Moving on, let's go back to grade 10 and look at what we did in our CRJ and our CPJ. Now, the cash flow statement, because the emphasis is on cash that comes into the business and how this cash was used, it makes sense to look at the cash receipts, and we know from grade 10 all the money that we received we recorded in the CRJ, the cash receipts journal, and any payments that we made we recorded in the cash payments journal, the CPJ. So essentially the CRJ would tell us about the money that came into the inflow of cash, money coming into the business, and it would give us quite a detailed list of the different sources of cash coming into the business. The CPJ will tell us how we spend that money. So what I did here is to put them in colors just to assist with how we can categorize them into the different sections. Exploring the cash receipts journal, we know the biggest source of cash coming into the business will come through sales. And I've also put in a folio reference, the N here, saying that it is a nominal account. The B here refers to a balance sheet account. So I have done this because I want you to be clear that cash receipts, it does not mean it's income. You need to know the difference between receipts and income, and you need to know the difference between payments and expenses. So your sales would be your biggest income. Money that you receive from your debtors when they pay their accounts because they bought goods from the business would also be recorded in your cash receipts journal. It will be part of your receipts. Income receipts, that would be income from other sources besides sales, such as rent, commission, debts recovered, any other money that the business receives. Even if they sell an asset, they can sell assets, okay. And then you've got your interest income. If you have investments, you would get money coming into the business in the form of interest. So the blue on this list here would be talking to the operating activities. That's what you do on a daily basis. You have sales, you have money coming from debtors, income, your tenant will be paying the rent on a monthly basis, and interest, if you have investments, will be deposited into your bank account on a monthly basis. So clearly, looking at the blue examples from your CRJ, it shows things that goes on a month by month basis. So it's routine, and that's why we call it operating activity. It's part of your operating activities. The examples that are listed here in black, investment matures. If your investment matures, you will get the money back. Remember, you have to invest first before it matures. So the maturing step would take place after you have made a fixed deposit. So when we look at the term investment, we are referring to here a fixed deposit. This fixed deposit matures, you get the money back. It is a receipt, money coming into the business. And proceeds from the sale of a fixed asset. Remember, when you sell a fixed asset, in the CRJ, you will not focus on the profit that you received the profit on sale of that asset, because you know the big calculations that you have been doing from grade 11, the grade 11 fixed assets section. Here, the key word here is proceeds. How much did you sell that fixed asset for? So the proceeds will concentrate on the amount of money that you received from the sale of that fixed asset. Just be careful of this here now, because we are not talking about the actual asset disposal account that you have been doing. Okay, and that would, in black here, I've got the investment, that's your fixed deposit, and I've got something about the fixed assets. So this two would be examples of inflow of cash from the investing activity section. Going back to our list here, you see investing activities. This section concentrates on the fixed assets and the investments in terms of the, let's say the non-current assets of the business, the non-current assets. So therefore, I'm focusing here on the investment, which is a financial asset, and then I'm focusing on the fixed assets here. This is a financial asset, and this would be my tangible asset. It won't be one that I bought, because when I buy, money goes out of the business. This would be in specific reference to the one that I sold, right? So those are just the two examples that you need to look at as sources of the inflow of cash coming to the CRJ. Now, the last two on the list here, the issue of shares. When the company issues additional shares, obviously money coming into the business, it's an increase to the ordinary share capital. Also, if you don't want to issue shares, you can decide that we're going to take out a loan, and if you receive that money from the financial institution that decided to lend you the money will be coming into the business. It would be an inflow of cash. So looking at this list here, I've got my operating activities. I show them in blue, my investing activities and my financing activities. So from the receipt section, become familiar with those different concepts or different examples that would fall under each of the sections on your cash flow statements. Looking at the cash payments journal, you have a similar type of argument, but the argument here now is on the outflow of cash. Outflow, money spent or money leaving the business. And looking at the blue as being my routine procedures again, the purchase of stock. I have to buy stock in order to have sales. I have to make payments to my creditors, people that I buy goods on credit. I have expenses that I must pay: telephone, water and electricity, insurance, advertising. You know the list. It's a long list of expenses that I need to pay for, wages and salaries as well, interest on loan. That will be part of my thing that I need to consider. If I received a loan, I've got to pay interest. And then the last two on the list here are specifically for companies. Your income tax that is paid to SARS. I'm going to have to make payments to SARS. This I won't be doing on a monthly basis, unless it's VAT. VAT I would pay on a monthly basis, but income tax itself I would not pay on a monthly basis. I would pay provisional tax during the year, and then I would look at my tax at the end of the year to see how much I need to pay there as well. And dividends, same argument as the income tax argument. I don't pay that every month, but it is the portion of the net profit that I would pay to shareholders. And because these two are related to the net profit of the business, I've also grouped them under my operating activities. Okay, so you've got the blue, which will tell me the inflow of cash, the examples of inflow, and then you have more examples of outflows of cash. Looking at the black examples here, that this refers to my investing activities. The biggest one of here would be my purchase of fixed assets. Money spent to buy fixed assets. An outflow of cash, as you can see, you have to spend money. And investments, when I do invest in a fixed deposit, I'll be taking out money from my savings account or my current account, and I'll be placing that money in a separate investment account with the intention of getting a higher interest rate. That's the intention of investments. And then that first action of investing the money would be an outflow of cash. And remember, it is linked to this investment matures year. You first invest the money and for a certain period of time, and then at the end of that period, you would get that money back. That's when the fixed deposit would mature. So you have an outflow of cash and an inflow of cash for the investment. With regards to shares, you would spend money. Most of the time you would be issuing shares to get money. This is the main intention. But there are instances when the company will repurchase shares from certain shareholders who do not want to remain as shareholders. And in this instance, we have to outlay cash. We have to spend money. We have to pay them to buy back their shares. Therefore, it's an outflow of cash. And obviously, the last one on the list, a repayment of the loan. This year is going to be an installment that you repay every month. At the end of the financial year, we'd like to see how much of the loan did we pay off. That payment towards the loan itself would be an outflow of cash. At this point, I want to make it very clear that the repayment of loan is to bring the loan balance down. You took a loan for a certain amount. Let's assume it's 500,000, and then you make monthly payments to reduce that balance that you owe them. That is not your interest. Interest is the expense of the loan, and every time you pay interest on the loan, every month you pay interest on the loan, you will be paying an expense to use this money of the bank. You will not be bringing down the balance of that loan. So don't just keep that in mind, that the interest is the expense. The repayment is to reduce the amount of loan that you are actually that you borrowed. Okay, so moving on, let's now explore the different sections of the cash flow statement in greater detail. And for this, we will look at the actual format of the cash flow statement. Right? The first thing you need to worry about is make sure you have the correct heading, cash flow statement for the year ended, because you prepare it for your financial year. And looking at the different sections, like I mentioned earlier, you can do each section separately. You might decide that you want to start with the financing activities, and another person might want to start with investing. It doesn't matter. You're just going to do what you can as quick as you can. Make sure that you also economize on time. In an accounting paper, you know, time is your worst enemy. Okay, let's go through the sections in detail. The first section concentrates on the cash effects of operating activities. So this here is a title, the cash effects of operating activities. I wrote down here 4 items. It's to remind you that when you are doing this section, you need to have 4 items that you need to cover in this section here. The first item is called your cash generated from operations. So the cash generated from operations is normally a note to the cash flow statement. We will look at that note in greater detail at the end of this discussion here. And the amount that we get here, I've also inserted random amounts here just to show you where do we put the amount and what's the significance of those amounts. So when I say cash generated from operations, I'm focusing on this word generated because I'm assuming that from running my business in a effective, efficient way, that I should be able to generate cash, and I expect this figure here to be a positive figure. So therefore you see there's no brackets on that amount there. I am assuming that it's positive. Remember, a poorly run business can have a negative figure here. This amount it does not have to be a positive, in which case I won't use the word cash generated. I would have to say cash utilized for operations. Now this operations here, this whole note it focuses around my net profit for the year. Remember, my net profit comes from the income statement, and that's the bulk of my operations. And it will also focus on my working capital. Working capital being my current assets and my current liabilities. And they are also components of my routine operations of the business. item that you will list under operating activities would be interest paid. Interest, I want you to focus on the words here. It's paid, interest paid, tax paid, dividends paid. This is, first thing is, it's giving you a clue if you see the word paid. So obviously that is an outflow of cash. Okay, I'm consistently reminding you of the purpose of this cash flow statement. It's going to show me the inflows and outflow of cash in a business, and which I did not tell you earlier on, but when you are writing your numbers, your amounts in this last column here, these amounts, they represent inflows and outflows of cash. For example, this 780,000 would be an inflow of cash. When I don't use the brackets, it's an inflow of cash. That's why I've got the term here, generated. But now when it comes to interest paid, that means it's something to do with my CPJ. It's an outflow of cash, and all the outflow of cash on this entire cash flow statement, I would be using brackets to show that it is an outflow of cash. So here's one item where you don't have to think much. You just know it's going to be an outflow of cash because you have an hint that tells you that it's outflow. You've got a word there. Obviously, if something is paid, it's going to be an outflow of cash. Now this figure here, interest paid, would, in most examples, this would be your interest from your income statement, and the reason for that is because you are now familiar with the term interest being capitalized. When interest is capitalized, it means that the banks apply a percentage, the interest percentage, to our outstanding balance on a monthly basis, and they would get paid. They would take the money from our account. So that's why we don't really do a calculation for interest paid. We just look at the interest expense, and that would be the interest paid for the year. Okay, and that's the interest. You don't pay much attention to that one. You just simply take this amount from the information on your income statement. It will be, in most cases, equal to your interest expense. The next item, the third one, would be income tax paid. Again, you see the word here, it's paid. Income tax paid, so this amount must be in brackets. It's an outflow of cash. Again, I want to emphasize the word paid here so that you don't mistake this income tax to be the income tax expense for the year. This would be a calculation that we would need to do, because when you've done the income statement, you've got net profit before tax, then you've got income tax for the year, and you have net profit after tax. Now that income tax on the income statement is your income tax expense for the year. It's not your income tax paid for the year. You need to be very clear about that point. Now, the income tax expense on the income statement, there could be a balance that you did not pay. You still owe SARS some money at the end of the year. So therefore, the entire amount from your income statement, it might not be the amount that you've actually paid. Remember, we have come across provisional tax payments. So the company does make provisional tax payments during the year, and that when they make provisional payments, they are paying income tax in advance. They don't know what the tax expense is going to be for the year, so they start paying up. And just to give you an example, if I made provisional payments of for example, 80,000 rands during the year, that 80,000 rands is like an advance payment on my tax, because I don't really know what my income tax is going to be at the end of the year. I've made provisional payments based on trends from previous years, and I look at my profit at the midpoint of the year, and then I've got some idea of how much my tax is going to be. It's just an exercise that I do to reduce my tax liability at the end of the financial year. Okay, so in simple terms, I am paying off an account where I don't know the balance. So let's look at my example that I gave you. I said I paid 80,000. So now that payment of 80,000 is a provisional tax. It's going to be part of this figure here. It must be part of this figure because I paid it. It's an outflow of cash. Now, if my income tax at the end of the year, it worked out to be 100,000. that's based on my net profit for the year. I was supposed to pay them 100,000. In that example, it clearly shows that I still owe SARS another 20,000. SARS will have a balance of 20,000 due to them. But if I paid 80,000 and my tax was 70,000, then there I have overpaid SARS, and SARS is going to owe me 10,000. There's a balance due to the business of 10,000, an overpayment to SARS. So just keep that in mind, but we'll explore it in greater detail as we do more examples. And the last item on this list, number 4, is dividends paid. Dividends paid, I want you to think of the same argument as I have discussed under tax paid. This dividends paid, it's the amount that I paid to shareholders in the form of dividends. It's not the dividends for this financial year. If I want to know what are the dividends for this financial year, I would go to my retained income note, and I see there's 2 small subheadings there. It says interim dividends and final dividends. Now when I add that up, that will be my dividends for the year. It's not my dividends paid. Dividends paid, how much did I actually pay? How much left the bank account of the business and was given to the shareholders, because they are the dividends that are due to them. And again, this amount has to be in brackets because it represents an outflow of cash. So to summarize the operating activities, we have 4 items. The one item is focusing mainly on the net profit of the business. It's coming from operations. And then we have 3 outflows. You can see I put them in colors here. It's like a green color, and they are all outflow of cash from operating activities. Remember, your GAAP principles, one of the main GAAP principles that focus on the term materiality. If something is material, it must be disclosed separately, and you will find that will be the main reason for these items here not being grouped together with the operating activities. Interest paid, shareholders and other users of financial statements, they are interested to know exactly how much is this company paying in the form of interest for money that they have borrowed. So we disclose this separately, and the tax is a special item, it's disclosed separately. Dividends is also disclosed separately. So therefore these 3 items, they represent outflows of cash, and they must be shown in brackets. Remember, in an exam, if you do not put in your brackets there, then you are actually telling me that this is an inflow of cash. Remember, if you leave out the brackets now, then you are saying this is an inflow. You are equating this number to this 780,000 inflow. So you would be penalized for that. Okay, I think I'm making that quite clear. Let's look at the next part, the investing activities. This here is another section of your cash flow statement, and this here is a heading. It's a subheading, cash effects of investing activities, and we've got 3 items that comes into this section here. So what we're actually doing now is just looking at the items there before we actually look at an example. We need to clearly understand the format, the structure, and we need to clearly understand what goes into each section, and we need to clearly understand which ones represent an inflow of cash and which ones represent an outflow of cash. So in this section here, the largest one would be my fixed assets purchased. Now, when the company is investing money to buy fixed assets, we are spending money, and you know from your discussions on fixed assets, when we did those topics, whenever we buy fixed assets, we always show them at cost. So this amount would be the cost of the fixed assets purchased during the financial year. Money spent to buy fixed assets, it's going to represent an outflow of cash, and that is why we have the brackets there. Then the second one, proceeds from fixed assets sold. When we sell fixed assets, now this is a special point that you need to know for grade 12, right? Let's put an asterisk there, because remember, it is a special condition that we have placed in here to make the cash flow statement a little bit simpler for us. What we are saying is that when sold, we are always going to show this amount at carrying value. So this is an assumption. We are saying that whenever we sell fixed assets, we are going to sell it at its carrying value. So that's nice. Now that's good news for you, because when you are doing the cash flow statement and there was fixed assets sold during the year, you know that you are going to record its carrying value here. This does not happen in reality, because you would not always sell your fixed assets at carrying value. Now, you might be wondering, because when you did the section on asset disposal, you had a profit of sale of asset. We are going to ignore that when we are doing this part of this cash flow statement. Okay, so that's a bit of good news, where we're not going to work out profit or loss on sale of asset. We are just going to simply look at any fixed assets that we sell. We are selling them at carrying value. So that is why sometimes in an exam paper, they would not even give you the amount. They will say fixed assets sold, and they expect you to calculate the amount that you received for selling this fixed asset, and then all you need to do there is calculate the carrying value of the fixed asset that was sold. Just to remind you, the definition for your carrying value again, that would be your cost minus its total accumulated depreciation on the date of sale. And that's the amount that you put it in here. At 22,000, you see I do not have it brackets around that, because now that clearly tells me that this is an inflow of cash. Which makes sense, because I'm selling fixed assets. Someone bought this from me, they'll have to pay. It's an inflow of cash. Right, so that's the second item under investing activities. Can you see the first two items there talking about the fixed asset? One is when I buy, the outflow, and the other is when I sell. So they are related. Those two are related, and they fall under the same section, investing activities. So you will see later on when we do some calculations that we calculate both at the same time as well. So this 2 year, it's not going to be much of a stress to worry about that one. The third item under investing activities would focus on my fixed deposit. Now, my fixed deposit is an investment. I will find this on my balance sheet. I would find it there under non-current assets. It would say financial asset. It's a financial asset. This one, I must just be careful with this one, because I need to see whether it has increased or decreased. You remember, if you can remember back to my CRJ and CPJ, my fixed deposit, when I invest money in a fixed deposit, is going to be an outflow of cash. Outflow of cash is when I increase this increase here, increasing my fixed deposit. It means I am taking money out of my current account, banking account, and I'm placing it in a fixed deposit account. So although the fixed deposit itself amount is increasing, but my bank balance is going to decrease, and therefore an increase will represent an outflow of cash. Now, when the fixed deposit matures and I get the money back, that would be a decrease in the fixed deposit, and the fixed deposit when there's a decrease in the fixed deposit, that would now represent an inflow of cash. I'm making this very clear now, because to write this amount down here, this is one of those amounts where I can't just put a bracket. There's no clues telling me that it's a definite inflow or a definite outflow. I need to look at the balance in my fixed deposit account from 1 year to the next to see whether it has increased. Did I invest more money, or whether it decreased? Did my fixed deposit mature and I got it back? And then I would know whether I must put a brackets there or not. In my example here, I've got 30,000 and I've got no brackets. So I'm saying that this 30,000 is an inflow of cash. If it is an inflow of cash, that means the fixed deposit, there was a decrease in my fixed deposit. Money came into the business. Fixed deposit has matured, and I received this 30,000. Therefore, my fixed deposit would have decreased. The balance from 1 year to the next would have decreased. Then I would not write the word increase. I'll just say decrease in fixed deposit. Right. So sometimes you can even write the word here, change in fixed deposit. Change in, it can either increase or decrease, but the examiner would get an idea of whether you understand this by looking at what you've done here. Did you put it in brackets or did you leave out the brackets? If you left out the brackets, you are telling me that it's an inflow of cash. If you put a brackets, then you are telling me that we have invested more money in fixed deposit and that is now an outflow of cash. So those are the three items that you would concentrate on there. And then now the last part of the statement, your cash effects of financing activities. Financing activities, where did I get the money from? And then over here as well, I'm going to look at only three items. Two of the items would relate to the shares, ordinary share capital, and the third one will relate to the loan. Now remember, you must be able to relate all the things that we learned in past topics and relate them to this topic here. So when I talk about my shares and I talk about loan, I'm talking about capital employed, and capital employed will tell me where I get the money from to run this business. So let's unpack each item on this list. The first one, clear proceeds from shares issued. Now, if I issue additional shares in the company, then that's going to definitely be an inflow of cash. There can't be a brackets around this 400,000. So this 400,000 would be the amount of money that the business received when they issued more shares. Now, in an exam, they would not just give you this number of 400. They would say 100,000 shares were issued at 4 Rand each, or they'll give you some information where you need to calculate this amount here. The main thing you need to remember at this point is that this amount is an inflow of cash. The second item on this list, funds used to repurchase shares. How much did the business spend to repurchase shares? So therefore, this has to be an outflow of cash. It tells me the amount of money that I spent to buy back shares from someone who does not want to be a shareholder in this company anymore. Now, just be careful with this one, because this buyback of shares, you are so familiar now with the ordinary share capital note and the retained income note. You would have noticed by now that there's an amount for buyback of shares on the ordinary share capital note, and there's an amount in the retained income note. So the funds that I'm using would be the total amount of money that I spend to buy back the shares. It will be the portion that is contributed by the ordinary share capital account and the extra portion that had to be contributed from the retained income account. So for this 1 year, you need to add up the amounts for ordinary share capital, the part, and the part that comes from the retained income. So we will look at an example just now, but the main thing you need to take into account at this point in time is that it is a definite outflow of cash. It must be in brackets, money is being spent. The third item under financing activities would focus on the loan. And now, when you're looking at the loan, I want you to go back and think of the same argument that you used with a fixed deposit. Because with regards to the loan could either increase. If you increase the loan, you took more money, that would be an inflow of cash, or you might have decided, no, this loan is not working, and you decided to start repaying a bigger portion of the loan, and you are decreasing your loan. And then if you decrease your loan, this would be an outflow of cash. So again, the amount that you write here will depend on whether the loan increase or decrease, and it would depend on whether it has a bracket or it does not have a bracket. So you can see with regards to the fixed deposit and the loan, I don't know, I cannot say it's a definite inflow or a definite outflow. But with all the others, I'm looking at my colors here. I've got definite inflows and I have definite outflows of cash. Okay, so in my example here, when I got a brackets around 60,000, I am saying it's an outflow. If I have an outflow, it means that I decided to pay back the loan, so therefore the loan would have decreased from 1 year to the next. That amount, the decrease would be the appropriate detail of a year, decrease in loan. So, and that's why I have the bracket. If I said increase in loan, then I would have no brackets, because that would represent an inflow of cash. Right, getting the idea now. So just be careful. We went through it quite carefully here. We looked at So that third step now, doing the loan, that would conclude the three parts of the cash flow statement. So that actually brings us to the end of the cash flow statement. So let's look at each section again now. The operating activities, you've got these four amounts, and then you've got one amount that is an inflow of cash, and then you've got three outflows. You just simply need to find the difference, and you put the answer on the top there. Now remember that one, it could be in brackets, representing a net outflow, or in this case here it's a net inflow, 637,000 net inflow from that's your cash effects of operating activities. So you have to put this answer on the top here. You must do that part there. It would be this amount minus minus minus, and you get that there. You'll find this the net figure, and you do that for each section. Looking at the investing activities, I have a net outflow of 268,000. I've got it in brackets because my largest figure there is fixed assets purchased to 320,000, and I've got 22 inflow and 30 inflow. I'll say that amount there. I've got minus, plus, plus, and they end up with a net figure of 268,000. It must be in brackets. And then the same for my financing activities. I've got a positive inflow there, a negative figure for funds used to repurchase, and I've also paid back part of the loan. So I'll take 400,000 minus 43 minus 60, and I've got a net figure, an inflow there of 297,000 rands. Okay, so now the conclusion of this financial statement, the cash flow statement, is my net change in cash and cash equivalent. So that would be the final answer of my cash flow statement, the net change in cash and cash equivalent. Putting it in bold because that's what we are working towards, the net change in cash and cash equivalent. This answer here, it comes from the top. So you take this amount, that is an inflow of cash, minus 268 and plus 297. So the net change in cash and cash equivalent for this financial year was 666,000. So my example of the figures that I put in here would show that this company is in a good position when it comes to the management of its cash. Its cash inflow showed a net inflow of 666,000 rands. Now to check that answer to see if it's correct, I can just look at my bank balance, my cash and cash equivalent, opening balance and my closing balance, and I want to get the same answer here. So that's another good point when you're looking at the cash flow statement, because you can check your answers from the top down. You come to this answer there, and then you look at the two bank balances to see whether you're coming to this answer here. Okay, so the bank balance, the opening balance, cash and cash equivalent, this is given on the cash flow statement. Sorry, on the balance sheet, you will see this figure here. It will be there under current assets. Remember, I'm always taking you back to something that you've done before, and I hope you are able to visualize exactly what I am also seeing. I can see this 20,000. It's the opening balance in my cash and cash equivalent. It is last year's amount under current assets, and I can see three things under current assets. I can see inventories, trade and other receivables, cash and cash equivalent, and the balance there is 20,000. So I started the year with 20,000. My closing balance in my bank is 686,000. So the difference there, that means it increased by 666,000. There was an increase. My cash balance increased. It was 20 and it's now 688. So clearly it increased by 666,000. Okay, there's a way of checking this one, is to look at this figure at the top there, plus your opening balance would give me my closing balance. So now, in some cases where they don't give you this amount, if that amount is not given to you, then what can you do? You can simply just use the bank balance to calculate this amount. You'll say, you work backwards up this day. You'll say, instead of now, it's saying plus here, you change the sign with working backwards. You'll say 688 minus 20, and that will give me my 666,000. So remember, you have two options in which to calculate your net change in cash and cash equivalent. You can calculate that by looking at the bank balances, to see how much it either increased or decreased from one year to the next, or you can just work down the cash flow statement to come to this figure here of 666,000. Now, in an exam situation, this might take too long to do. You'll find sometimes they don't ask you to do those things. They actually have them shaded in the answer book, which means you don't need to do them. But then you need to do this one here, and now you might find you cannot do this there because you are not asked to calculate those. And sometimes you might not even have enough information to calculate them, and you would have no option but to use the bank balance, the opening and the closing balance, to calculate the net change in cash and cash equivalents. At times, it's a separate question on its own. You might just get a question saying, calculate the net change in cash and cash equivalents, and you're not required to do the entire cash flow statement. And in that case, you need to do it by just looking at the opening balance and the closing balance in your cash and cash equivalents. Right, so the format, understand it well, and remember that in an exam, sometimes they're not specifically asking you to do this cash flow statement. You hardly get an exam paper where they ask you to do the entire cash flow statement. Sometimes you are required to just calculate certain amounts, and other times you just need to fill in the blanks. And in some cases the details are given, some cases the details are not given. So you would not be taking any chances. You would know this statement thoroughly from the top to the bottom, and you would be able to work it from any direction and fill in any missing amount at any point where the amounts are missing. So now let's look at what information that is generally given in an exam paper. The information, you know the structure of an exam paper. It will say question, and then it will start off by required. What do they want you to do required? And then after the required, it will say information, A, B, C, D, E, and you need to look at all the information that is given to you, and you need to use that information to answer the questions, right? So what are we expecting to see here? First of all, we know that they will give us part of the income statement. They will not give us the entire income statement. We're looking at an extract, and we're looking for information for the current financial year. We need to know certain things from the income statement that we would use to complete this cash flow statement. The second bit of important information would be comparative balance sheets. When I say comparative, I mean I want balance sheet of last year and this year. I need both figures. I need to see how some of those things have changed from one year to the next. Did it increase? Did it increase? And I need the difference. So the comparative balance sheet, last year's figures would be my opening balances, and this year's figure would be my closing balances for all the accounts that are listed on that balance sheet. And then I'm going to need specific additional information which I cannot get from the income statement or the balance sheet. Now, just three examples here, and they are the most common examples. Get used to this, become familiar with this. You must look for this in the additional information. The first one, it doesn't have to be in this order, but this is what you are looking for. What are there any changes to the fixed assets? And I remember on the balance sheet, you would have fixed assets there. It would show you the opening balance and the closing balance, and it would be the balance of your fixed assets at carrying value. It would be there under non-current assets, tangible assets. It's not going to give you on the balance sheet. You're not going, when you look at those two figures, it's not going to tell you much. It's just going to tell you what was the balance at the beginning of the year in your fixed assets at carrying value, and what was your balance at the end of the year. Now, to complete the cash flow statement, we saw that we need to know how much was spent to buy and how much did we receive when we sold. So therefore, the additional information would need to tell me that. And I need to know what caused the change between the opening balance and the closing balance under my fixed assets. So clearly, information about the fixed assets won't be on the balance sheet alone. I need to look at the additional information to get that information there. The second one, following with the same argument, so now I know that that's going to be part of my financing activities. I need to know how much of shares were issued during the year, and I also want to know how much the company spend to buy back shares during this financial year. So when I look at my balance sheet and I look at last year's balance compared to this year's balance, it's simply telling me the opening and closing balance. It's not going to tell me the actual changes that happened to the capital account. So I need to look for this in the additional information that is provided. I'm not going to find it on the balance sheet itself. And then the third bit of information would be my dividends. Now I know I need information about dividends on my cash flow statement there. How much did I pay? And when I look at my two financial statements, the income statement will tell me nothing about dividends. The balance sheet will not tell me anything about dividends. So I need to know a little bit more. I need to look at the additional information to get my details about these dividends. If I am given the retained income note, I can see it would be there. There'll be interim dividends and final dividends. If the note is not given, then they need to tell me about the dividends that was paid during the year and the dividends that was declared at the end of the financial year. So this 1, 2, 3, this is the information you are looking for and what you need to answer a question on the cash flow statement. So I have an example here. The income statement, this is an extract. This is how it will normally be presented to you. Remember, you do not need the entire income statement. You need a part of it. You need certain important things that you are going to use to complete that your cash flow statement. Now I'm going to highlight some of them that you should look at. Some of the information, like for example, the gross profit here, I did not see in my entire discussion above, I did not mention that there, and I don't know why it's put in there. The operating profit, I can see that it's not going to be relevant to do the cash flow statement. So in our setting, when we set exam papers and test papers, we normally like to call these type of stuff, we call them distractors. They just confuse you to see, you'll be wondering, do I need to use it somewhere? And actually you don't need to use them anywhere for the cash flow statement. So the important ones that I need here would be, I need depreciation. I'm going to use that somewhere. I'm going to need the interest expense. I told you that's going to be my interest paid. My interest expense will be my interest paid. And then I'm also going to need my tax for the year, because income tax paid, I'm going to have to compare that to the income tax expense for the year. So I'm looking for income tax here, and I see they were being a bit nasty to me. They did not give me the income tax for the year, but they are saying net profit before tax. They give me an amount, and then they say net profit after tax. So then they want me to do a little bit of work here. I've got before tax and I've got after tax, which means I need to do a calculation. This one is not too difficult. It's simply the difference. The difference will be my tax, and there I show the calculation. The income tax for the year will be 329,000. So when you see this in an exam paper like this, there's no need to be concerned. Examiners will sometimes give you the amount. If they just gave you the amount 329,000, then you'll have no problem there. Carry 1 mark. Sometimes I would prefer if they did not give it to me, but they wanted me to calculate it in some way, because if I'm expected to do a calculation, then it's going to carry much more than 1 mark. Okay, so here I know they try to trick me, but it's not a trick. I know that the difference between net profit before tax and the net profit after tax would be the tax amount. So there I did my calculation. Sometimes they would leave out an amount. They would leave this out. They will say net profit before tax. They'll give you the amount, and then they'll say the tax. They'll give you a percentage. They'll say income tax is 28% of the net profit. And if they do that, then again it's quite simple. You're going to take this amount here, you say times 28%, you're doing a calculation, and you'll get the tax amount. No problems there. And then at other times they might decide no, they are not going to do that. they are going to give you the net profit after tax. They don't give you that amount, they give you the net profit after tax, and they say that is 28%. The tax rate is 28%. So you need to read carefully to see how are you going to do these calculations. Remember, if they gave you the net profit before tax, then you simply find 28% of this amount, and then that would be your tax amount. But if they gave you the net profit after tax, then it's a little more tricky, because what they have done there is they've already deducted the tax, and then they told you that the tax rate is 28%. So what you need to do now is you need to say that this amount here is equal to 72%. This was equal to 100%. The tax is 28%, so this must be equal to 72%. So there's a small trick that I want you to learn. If you want to calculate an amount, you simply need to say, what do I want? And then you divide that by what do you have. I want 28%, so you say this amount here times 28 divided by 72, because this here is 72% now. It's after the tax has been deducted. And then you will you can try that out. You'll see you will get this answer there. So make sure you know the different ways in which they're going to present this information to try and get you to do some type of calculation. The easiest case scenario here is when the tax amount is just simply given, where they just put an extra line there and then they put in the tax amount in here and it's given. In that case, you don't have a problem. You just use the amount that is given. Now, looking at the balance sheet, this is our look. I want to just unpack the balance sheet a little bit to show you what information you should be looking for. You see what I was saying earlier on about the fixed assets. It's shown at carrying value. You got the carrying value. This would be the balance at the end of last year, and this is the balance at the end of this year. So this is the first thing you need to do, is look at the dates. 2018 is there, 2019 is there, so that this column would represent my opening balance and this column here would represent my closing balances, right? Establish that first. So far, I think we've been lucky. I did not see where the examiners try to trick you by putting this column on this side, but just be sure that you know which column applies to the opening balance and which ones apply to the closing balance. So I've got my fixed assets here at carrying value. Like I said, this amount, I can see there's a difference there, but I don't know how much did I spend to buy new assets, and how much did I receive for selling new assets. So this one there, I'm just going to put a star to say, okay, I'm going to look at that one to see if there's any additional information that is going to help me there. I need additional information. I need more information. With regards to my financial assets, fixed deposits, I don't really need any additional information. I can see that it was 600,000 last year and it decreased, it dropped. So when it drops, that means this was an inflow of cash, right? Inflow of 250,000. I can write that down there. I know this is an inflow of cash. A decrease in the fixed deposit is an inflow of cash, 250,000. When it comes to my current assets, I'm not going to look at these figures here because I need to unpack the different components of the current assets. The inventory would be part of my working capital. So, and it did decrease. My inventories, my stock, I can see it decreased. It was 334 and it's now 322. Now what I want to do in my last column here, where I'm putting in these amounts, I want to look at the effect of these increase and decrease on the cash of the business. What happened to cash when there's a change from the opening balance to the closing balance? So looking at inventories, it was 334,000 and it decreased. Now when my inventories decrease, it's going to decrease when I make sales. So a decrease in inventories would represent an inflow of cash. So the difference here, this 23 is a net inflow of cash coming from my inventories. Trade and other receivables or debtors, it was 228,000 and it's now 245,000, so it went up. Debtors increased. If debtors So now when your debtors decrease, the balance, your opening balance and your closing balance, you see your debtors have increased. The amount is increased from one year to the next, but that would represent an outflow of cash. To understand the logic of why this is an outflow of cash, remember when your debtors are people that buy goods and they do not pay you now. So if you are allowing them to buy more goods on credit, it costs you more money. So therefore, it would represent an outflow of cash. If that is a bit complex to understand, then you look at the opposite of that. If debtors pay you, it would be an inflow of cash. If they paid you, this balance should have decreased here. So obviously, if they were not paying you, but they were buying more, and therefore now it cost you to supply the goods to them, which they are not going to pay now, but they are going to pay it at some later date. Okay, so therefore, you can look at that as being an outflow of cash. An increase in debtors it will represent an outflow of cash. Then I have SARS here, SARS under current assets. This amount here, if SARS is under current assets for this financial year, that means I have overpaid SARS and they owe me 6,400 rand. I'm going to just make a note of that, because when I'm calculating my income tax paid, this is going to be very significant there, because obviously I've overpaid, and that's why SARS now is shown as a current asset. Now looking at my cash and cash equivalent, last year I had a debit balance of 2,500. This 2,500 there and the cash and cash equivalents, and then I've got a bank overdraft last year, which under current liabilities, showing that my bank balance last year was on a negative. Okay, so you will come across situations where your bank, your cash and cash equivalent, you need to look at both columns to see what was the net effect. So if I had a bank overdraft of 153,000, that means bank is on a credit, bank, or it's a current liability, but I also had an asset of 2,500. If I have to render an explanation, then this 2,500 could represent the petty cash. That's why it's a positive figure in mind. I have this money in my business. It's cash. It could be petty cash. It could be my cash float. So therefore, I'm recording them as positive. But my actual bank balance in my current account is on a negative. So you've got to bear that in mind. That was the situation last year. But this year, I do not have a bank overdraft anymore, but I have a positive figure under cash and cash equivalents of 88,900. So this amount here would represent, it can represent all three, the bank balance, the cash float, and the petty cash, all combined into one, being my cash and cash equivalent. But I know that it is a current asset. Okay, so that we will look at in a little detail when we're doing some calculations. So going down the list, what did I have here? I said this I need to look at later, and then obviously the cash and cash equivalents, I'm also going to look at that a bit later. Now looking at my shareholders equity, I know I do not use shareholders equity for my cash flow statement, but I'm interested in looking at the ordinary share capital. This was the opening balance and this is the closing balance. I need to know what caused this change. I know there's an increase, I can see the increase there, but the entire increase might not just be shares issued. There's two actions involved here. I issued shares and I also sold shares. I need to look at the additional information to see what caused this opening balance to change to become this as the closing balance. I'm not really using my retained income for the cash flow statement, so I can ignore that one. My non-current liabilities, I need this one here. This would be quite important because I'm looking at this for my loans. I want to see what happened to the loan. The loan has changed. I had a loan of 500,000 at the beginning of the year, and at the end of the year, its balance is 1,200. So clearly, I have increased my loan by taking out an additional 700,000 rands. So this would be an inflow of cash. I've got no brackets. I'm making this notes on the side here. It's information that I'm going to use to complete my cash flow statement. So at this point, I'm just unpacking the information so that when I do get to do my cash flow statement, I've already got notes on what needs to go in there. So when it comes to loans, I can see there I've got 700,000 and increase inflow of cash. My trade and other payables, creditors, this is part of my working capital. You see I've got this in red here, that's my working capital, and this is also my working capital. I want to see what happened there. It increased. My creditors, it was 285,000 and I increased to 323,000, and therefore that one now would be an inflow of cash. Remember, you need to try and focus on how does this become an increase in cash, because they did not give me any cash, but they allowed me to buy on credit, right? So when my creditors balances goes up, increase 285 to 320, increase by 38,000. Now that increase, it means I have 38,000 rands worth of goods or whatever I bought from them which I have not paid for. I have cash that is available to be spent on other things, and therefore it represents an inflow of cash. So this is technically an inflow of cash. Now if that is a bit complex to understand, then you do what you've done with debtors. You look at the opposite. If my creditors decreased, then that would represent an outflow of cash. It can only decrease when I pay my accounts. So therefore, if it increased, it must represent an inflow of cash. I hope that you are understanding this concept, especially when you're looking at the working capital, how an increase and decrease in working capital, and what effect does that have on the cash. Does it increase or decrease the cash? Now, looking at shareholders for dividends, these two amounts are relevant to my dividends. These two amounts are going to help me to calculate dividends, so I will look at this in greater details just now. I've got a star there to remind me that I need to calculate dividends paid, and these amounts are going to help me to calculate dividends paid. And then I have SARS here, income tax, this 98,000. Last year I was owing them 9,800. It was a current liability. I did not pay enough of the income tax last year. There was a balance still due to them, but this year it ended up being a debit balance. I overpaid them. So these two amounts in blue, they are going to help me to calculate my income tax paid. Right, so just by looking at the balance sheet, the information on the balance sheet, there's a lot of information that I need to extract from this to complete my cash flow statement. Okay, so the first note that I was wanting to share with you was the cash generated from operations. So the cash generated from operations is this note here. Remember, there is only one note to the cash flow statement. It's your cash generated from operations, and I need to know how much did this company make looking at the cash situation from the income statement. So this note is an important note. It hardly features in the exam papers, but certain aspects of it might feature in the exam papers. So you need to look at this calculation. You need to know exactly what goes into this note. Okay, so starting from the top, I'm going to look at my net profit before tax. So I take the amount net profit before tax. Where do I get that? I'm going to look at that amount from my extract of the income statement. You see there's it here, the net profit before tax is given to me, and I need to use that information in this note here. So I've got my net profit before tax. Then I want to add back depreciation. So depreciation, where do I get this amount? It's on the income statement again. That is why we need that information from the income statement. I'm going to add this depreciation back to this note, and I'm going to also add back the interest that will also be given to me on the extract. So these three amounts for the cash generated from operation, these three amounts are amounts that I'm taking from the extract of the income statement. I know you are getting a bit concerned because I did not explain to you now, but why am I adding these things back? So let's look at each one now. Depreciation, I'm adding this back because I'm The reason I'm adding back depreciation is because I'm doing a cash flow statement. The cash flow means I want to know what portion of my net profit is cash. So all the non-cash items, I have to add them back. I add them back, it will give me my net profit, the cash part of my net profit, when I take into account the non-cash items. In other words, I'm extracting the non-cash items out of my net profit. So just to explain that a little simpler, in calculating my net profit before tax, this amount here, I subtracted depreciation. Depreciation was one of the expenses. Now, if I want to know what was my net profit if I did not have depreciation, then all I need to do is add back depreciation to this amount, and that would have been my net profit if there was no such thing as depreciation. So that's the reason for adding it back. It's a non-cash item. Okay, now there are many non-cash items you came across, but for this section on cash flow statement, we're only using one example. So there's another good news for you, only one example of non-cash items which we add back. The reason we add back interest here, we're adding it back, is because I told you earlier on that interest is a material item that must be disclosed separately. So if you look at your cash flow statement on the top here, we had interest paid. We're subtracting it here. So because we are subtracting it, we are showing it on the face of the cash flow statement. So we add it back here. It's not a non-cash item. It's being paid. We're adding it back here so that we can subtract it on the cash flow statement, right? Being a material item. So this is the first part of this note, and then you'll get a total. This total will say operating profit before changes in working capital, and then now you look at your changes in your working capital, the one that I explained to you. Your inventories, what happened to inventories? That 23,000 was this amount here. It decreased, so therefore it's an increase in cash. So I don't put a bracket. And then my debtors, my trade debtors, what happened to that? It increased, so therefore it represents an outflow of cash. I put that amount in there. I take it from the top. And then my creditors is an inflow of cash. So I've got two inflows, one outflows. My net change in working capital goes on the top there. So you need to practice a few of this here just to get an idea of how you calculate this amount. And now I want to look at these two figures there, these two figures, and then I'm just going to add them up, and I'm going to get my answer here in the bottom, and this would be my cash generated from operation. So this is the note. You will do many of this. You'll get used to it. Examiners think this note is easy. It hardly features in exam papers. Most of the time it's given to you. Some of the information you might be required, especially this part here that is a little bit tricky about when to use the brackets or not. And again, you need to look at only your inventory, your trade and other receivables, your trade and other payables. A point of caution here, when you're looking at your trade and other receivables and your trade and other payables, always look at the notes that are given to the balance sheet, and always exclude SARS income tax and shareholders for dividends from these totals. They do not form part of your trade and other receivables and trade and other payables. And the other reason why we exclude them is because we deal with them separately on the cash flow statement. They have their own space. So this would be the first amount that you would put in to your cash flow statement. Right on the top there, you see this cash generated from operation. That would be the amount that you would put in there. Right. So I hope you are going to practice many of those amounts there. Okay, so now let me just get rid of that one and look at SARS. Now, when it comes to SARS, I want to calculate the tax. How much of tax did I pay? The next item on my list was income tax paid. I told you don't worry about interest paid because that amount is the same as your interest expense from your income statement. Now I want to know how much of tax did I actually pay. For that, the simplest way to do that is to do the SARS income tax account. So go to the SARS income tax, look for them on your balance sheet. I want to know what was my opening balance. At the beginning of the year, it was a credit. What was my closing balance? It was a debit. And I also need to know what was my tax for the year. Tax for this year was 329. So those are the three amounts that would feature in your SARS income tax account. So what do I have here? The opening balance, 9,800. You don't have to show it as a proper ledger account. You show it as a working. So you take this year amount, it's on the credit side, and then on the credit side you would put your income tax for the year. That's from your income statement. Remember, sometimes you have to calculate it, and sometimes it is given. This would always be on the credit side of your SARS income tax account. And then you look at your closing balance. This is the tricky one, because the closing balance, 6,400, is a debit. So when I look at this account in the ledger, that means the closing balance is on this side of your debit. Therefore, it's carried down. This one here is important for you to remember. You got to put in the amount, the carried down amount. Which side is it carried down? It's brought down on the debit side, it's carried down there. This will tell me that the way I've got it carried down would tell me that it is a debit balance at the end of the year. So now I am looking for a figure on this side here. That would be my bank figure, the missing amount. So this would be the amount that I'm looking for, and that's my tax paid for the year. So this is a simple way of finding out the total tax paid for the year. So looking at it again carefully, my income tax for the year was 329. That's not the tax that I paid. I need to see this opening balance. This is what I owed them last year. So and that's going to be part of the amount that I paid. And then at the end of the year, I paid an additional 6,400 rands, and therefore the actual tax money that I gave to SARS was 345,000 rands. Okay, so I hope you have understood that one, and also practice many examples. Some textbooks would show this as a note. It will say opening balance at the beginning of the year, balance on the income statement, and balance at the end of the year. And there are different methods to do this, but remember, you need to find the best way and the way that you understand the logic behind how it's done. For me, the ledger account is a simple way, and even in exam papers, you are allowed to show this as a working. You don't need to show calculations. So you've got opening balance plus the income tax plus the closing balance in this case, right? Now, just to show you an example now, what happens if this amount here was, or it was over there? What amount if SARS was there as a closing balance and it wasn't under current assets, it was a current liability? If the amount was here, that means we still owe them 6,400 at the end of the year. Then this carried down won't be there. This carried down will be on this side because it's brought down on the credit side. And then now this amount here would be 6,400 less than 345,200 minus this amount, which means I have to add this 2. I'll get a total there. I subtract this amount to get the amount that I actually paid SARS. So the balance for SARS can change. The opening balance can be a debit. The closing balance can be a credit. You need to be certain where you put your opening balance and your closing balance. The income tax amount would always be on the credit side, and the bank amount would always be a difference on the debit side. So you need to practice many of these things here and use many past year exam papers. Look for examples. It normally carries up to 4 to 5 marks, depending on whether this net income tax amount is given or not. Now, let's look at the next bit of information, which is your share capital and your dividends. Here, this is normally given as additional information. Let's read through it to see what it says. Authorized share capital. I'm not interested in authorized because authorized tells me my maximum number of shares that the company can have. I want to know what was my shares for this year. So I'm going to look at the information given. They tell me that it's 1,500 new shares were issued on the 1st of October. And I know I'll just leave the first line as my opening balance here. I'll leave that as my opening balance. And then I first issued shares, and then I bought Now, remember, when you are doing the cash flow statement, you might not be required to do this note. If you are not required to do the note, you can simply do it as a working, where you would not need to show the details. The important columns there would be your number of shares and your share values here. So looking at the information that I have on my, let's take this out, so I can look at the information on the top. Looking at my information here, you see this 2520, this figure here is my opening balance in my ordinary share capital account. I can write that in, and then the amount given on this side, that would be my closing balance, and I can write that in as well. So always use the principle that I'm showing you, where you start filling in the information that you know. You don't need to start from the top. You just start filling in what you know as you see the information, and you score your marks. So I know my opening balance, that amount is given there, and my closing balance, that amount is also given. So now I'm going to look at the additional information. I know that there was 150,000 shares that were issued on the 1st of October, so I can write in 150 there. And I know these are new shares issued during the year. I can write in the detail. They're not giving me any amounts, they're not telling me anything, so I'm just going to leave this place here blank and move on with my question. The next bit of information I have, 60,000 ordinary shares were repurchased on the 1st of January, so I can put that information in, 60,000 repurchased, and write that in there. And then I'm not going to put in that amount yet. Okay, let's take that. Okay, so repurchased, I'm going to explain this to you now, but they tell me that I repurchased at 90 cents above the average share price. Now, you know the average share price is, at this point in time, I need to take these two amounts and divide by the number of shares at that point in time, but I can't do that because I don't have this amount here, so I'm going to have a problem to calculate my average share price. So I'm just going to continue this activity and see what's going on here. On the 28th of February, the share register reflects a total of 690,000 shares, so I can slot that in there. So now, working backwards, I can clearly see what my number of shares at the beginning of the year. So can you see my exam technique that I'm employing here now? I am putting in the information that I know, and then I work backwards to find out the information that I don't know. So in this case here, the opening number of shares was not given, but I know there was 600,000 shares at the beginning of the year. 150 was issued during the year, 60 was bought back, and that is how I end up with a closing balance number of shares, 690,000 shares. Now I need to find this average share price of 4.30. Now your teacher has been telling you that you need to look at the amount of the share capital before the share buybacks. You look at this amount, opening balance plus the shares issued, and you're going to divide that by the number of shares to get the average share price. That's the way we do it. But now we have a problem here because we don't have this answer. They did not give me any information about the new shares issued. I only know the number of shares. So there is a small trick that I can do here. I'll take my closing balance, this number, and I divide by the closing number of shares, and you'll see you get an answer of 4.30. So if you can't calculate your average share price from the top, then you just simply calculate your average share price by using the closing balance, provided the share buyback is the last transaction on your share capital note, right? If your share buyback was before the new shares issued, then you can't use this to calculate your average share price. You can only use this, your closing balance, to calculate your average share price if the share buyback is the last transaction on this note. So I multiply this out, 4.30 times 60,000 shares, and I see that this is what ordinary share capital has contributed towards buying back these shares. And now I can look at these figures to find a balancing figure here. and that's how I get the amount of the new shares issued during the year. Remember, this new shares year now, that would be my shares issued for my proceeds from shares issued. That's the amount, that's 705. Can you see it took me a long process to get that answer there? This 705 is the proceeds from new shares issued. When it comes to the shares, money spent to buy back shares, I know share capital has contributed this amount here, but I need to know how much came out of retained income. So when I read this here, it tells me that I spent 90 cents above the average share price. So that means I spent, my average share price was R4.30 and I spent 90 cents more than that. So I actually paid R5.20 for each share there, and therefore the money that I spent to buy back the shares was 312,000 rands. I have to take the amount from the ordinary share capital and the retained income part to get the amount that I spent to buy back shares. And this information here I don't really need, but just to a way of interest, you can see that I spent 54,000 rand from retained income towards this repurchase of shares. Okay, so you need to also practice a number of these share capital notes. Look at the different ways in which they ask this question. Sometimes they'll give you the amounts. Always put in the amounts that are given to you first, and then work backwards to find the amounts that are not given. Like you've seen in this example, that amount was not given, and the amount for the shares issued were not given, and we needed to work backwards and forwards in order to establish those two amounts. Okay, we'll see why we need the amount when we look at the dividends. Now, they told me that the interim dividends was 55 cents per share, and the final dividend was declared, and they did not give me an amount here. Final dividends declared simply means that they decided that they are going to give shareholders these dividends, but it was not yet paid. So the final dividends will always be an amount that is not yet paid. So when you look at the dividends paid on this note here, this dividends paid, so it's going to be quite simple for you. The dividends paid is always going to be equal to the amount that is due at the beginning of the financial year. How much did we owe the shareholders at the beginning of the year? You see this amount here, 108. That will always be part of the amount that was paid to shareholders, dividends paid. This was the final dividend of last year. It's the opening balance of this year. So when you're doing your calculation, 108,000 will always be part of the dividends paid. And then the other part of the dividends paid will be your interim dividends. So you need to calculate what was the interim dividends. Once you can calculate your interim dividends, there you got your answer for dividends paid. It's going to be like that all the time. The only problem there would be sometimes calculating your dividends paid, because your interim dividends, because that amount is not always just given to you. And let's look at our example here now. I just got rid of your ordinary share capital note so that we can focus on the dividends. Now here it says 55 cents per share, and you must always look at the date to see when dividends was paid. Now in this example, an interim dividend was paid on the 31st of August, and then the new shares was issued on the 1st of October, so they were not there. So you need to look at this dividend here now. This 55 cents would have to be part only the opening balance. So there you'll take your 600,000 shares, you'll say times 0.55, and that would be your interim dividends, and you multiply that out and you get 330,000. So 330,000 rand would be your interim dividends in this example here. Okay, so just look at an example paper to see. There's three ways here. One, if they give you the amount of the interim dividend, which is 330,000, then you don't have any problem. You just say the opening balance for shareholders for dividends plus this 330, and that would be your dividends paid for the year. Okay, or they'll give you the dividends per share, like in this case 55 cents. Then you need to establish how many people, how many shares are getting this dividends, and you have to use 600,000 a year. Just be careful. You see the information that they gave you, and the closing balance number of shares is 690,000. It's a common mistake where learners take the wrong number of shares to work out this interim dividend. So you need to know how many shareholders are getting this interim dividend, and and to establish that, you need to look at the dates. This date here and the date when the new shares were issued. So if this was the 1st of July, and then in August they were getting interim dividend, then you will include these people as part of this number here that is getting the interim dividends. Okay, so that's the one other way in which they would do it. And in the last way, they would give you the total dividends. They won't say interim dividends here, they'll say total dividends. If they don't give you the interim dividends, or they don't give you the number of shares, but they give you the total dividends for the year, then what do? Is you want to find the interim dividends. You don't want total dividends. Now you know total dividends is equal to interim plus final. So, and this is a nice clue for you. The final dividend is always the shareholders for dividend at the end of the year. It's on the balance sheet. So you look at the closing balance, this amount is always your final dividends. So you want interim dividends. And if you are given total dividends, you simply subtract the final dividends, and you will get your answer for your interim dividends. And then that interim dividends you add to your shareholders opening balance, and you have your amount for dividends paid. So what we've done now is we looked at different types of calculations that are relevant for your cash flow statement. When it comes to your investing activities, fixed assets, for this one, you simply look at your note. Look at this portion here now. If you look at this, it looks very familiar. It's your note. This is a note to your balance sheet, where your fixed asset note. It's got cost, accumulated depreciation, carrying value at the beginning of the year, movements. You got additions, disposal, and you got total depreciation for the year. You got carrying value at the end of the year, and then you'll have cost and you'll have accumulated depreciation. So this is just an extract of that note. If you can become familiar with this would solve all your problems for investing activities. So what do you do here now? You just go to you write this down. This is your working. You look at the opening balance, this figure here, and that's your 2,598,300. Where do I get that from? It's this amount here, opening balance. Carrying value at the beginning of the year, you just put it in, and then at the end you put in your carrying value at the end of the year, 4,137,700. There's it here. You've got that in, so you can see how you fill in the information. And then you know depreciation, it was given to us on the income statement. You can put that in. So those three amounts are already given to you. You just need one of these two here and to calculate the outstanding one. So you look at your additional information. They are telling me additional property was purchased for 2.1 million. No other fixed assets was bought. So they are giving me the purchase. They are saying fixed assets were purchased for 2.1 million. I write that in there. And then they are saying equipment was sold at carrying value. No amount given. If no amount given, no problem. I'm going to use this here to calculate it. So clearly, what am I going to do now? I can work backwards up this way. Remember, when you're working backwards, you change the sign, plus, plus, minus, and you get this answer there. Or you work down that, plus that, minus that, and you get this answer there. So this here is actually a balancing figure. So this amount will be the amount that you will need for your cash flow statement. Can you see, just doing one note, you've got both figures. You've got your fixed assets purchased, the amount was given, and you calculated your fixed assets sold. Now, sometime in an exam, they will give you this amount, but they won't give you that one. So you simply put in the amount that is given and you work out the amount that is not given. And then those are your two amounts that you would insert onto your cash flow statement under cash this 2 year. You remember earlier on I said they are related. You just put those amounts in there. Make sure you put the brackets for the one that applies, and there you are moving. Right, and the last thing I need to do now is to look at my net change in cash and cash equivalents. I want to see my net change in cash equivalents. I can work this amount from the top down, or I can just simply use the bank balances to do this amount. Okay, so let me use the bank balances to do them. I'm going to look at my opening balance. I've got 153 minus 153 plus. This is a minus because it's under liability. I'm owing the bank money, and this is a plus because it's under current assets. So what I would do there is I would simply show minus 153 plus 2,500, and I've got a net figure of minus 150,500. So this is my opening balance. My opening balance was a negative, okay, because I took into account my bank overdraft and my petty cash. My closing balance, what was my closing balance? My closing balance was 88,900. So I will put my 88,900 here. 88,900 is a positive figure. And then I want to calculate my amount on the top there. And what I will do is, I know that this plus that amount is equal to, sorry, not plus, is equal to 88. So working backwards, I'm going to say this amount here minus this would give me my net change. Okay, so that's the technique you are going to use when you are doing your net change in cash and cash equivalents. Remember, you can also work this figure out from the top down. Okay, so clearly, in order for me to come to this figure here, I'm going to have a big my net change is going to be a big inflow because I moved from a negative balance to a positive. So I'm just going to add these two amounts, and then I'm going to get my answer here for my net change in cash and cash equivalents. Okay, so I hope I was able to assist you in some way in solving some of the issues that you might have with cash flow statement. The only way you're going to become good at this is by practicing different examples. Look at various examples in different exam papers. Information is presented in different ways. Use your highlighter, focus on the information that is used for each section.